This is Alan Bush with the Daily Financial Forecast for Tuesday, December 13th. Starting out with the stock index futures, we did see some new historical highs yesterday and some follow-through new record highs again today. And it does look like futures are overreacting to the news to the upside, even though it is very likely that the Fed is going to raise interest rates at the two-day meeting. Today and tomorrow, the Fed meets. So stock indices, I think, are likely to continue to advance probably through the rest of this year and well into next year. We did have some bullish news, however, in the form of Chinese economic news, with industrial production coming in quite a bit better than expected in China. Retail sales in China also coming in much better. So that's supportive to the indices. But the fact that the Fed is going to raise rates, in our opinion, normally that would be a bearish influence for the indices, and yet here we are at new historical highs, all of which suggest that further gains are in store for the major stock index futures. Now, moving over to the currencies, seeing the dollar index just holding steady, even though the Fed is, as we said, likely to raise rates tomorrow. Normally, higher rates is supportive to any currency, and that is the case for the dollar index, although the anticipated rate increase appears to be fully factored into current pricing. Longer term, though, the dollar index will probably continue its advance with one or more rate increases from the Fed likely next year. Also, we are seeing the euro currency a little bit better with an index of economic strength in Germany coming in stronger than anticipated. Also some gains in the pound after UK inflation coming in substantially higher than anticipated. Also, we can no longer say that the Fed is the only major central bank that is on track to raise interest rates. It now appears that the Bank of England, probably in early 2018, can raise interest rates at that time. So that has to be viewed as somewhat supportive to the British pound. Now, moving over to the interest rate futures markets, after the bonds making a new 17-month low yesterday, some short covering coming in today. Seems like there's relatively light volume on these recovery gains. I think once the Fed meeting is out of the way, that any strength in the bonds should be used as a selling opportunity, since the Fed is likely to remain hawkish into next year. And of course, that would be a negative for the bonds, plus inflation, which we expect to accelerate, is also a very much a negative and a bearish influence on the bond market. Moving over to the precious metals, weakness today as the dollar index had been very strong lately. That's a negative on the precious metals. Also, with the Fed likely to raise rates, also a bearish factor. And yet, once the Fed raises rates, as we anticipate tomorrow, I think traders will start looking ahead toward inflationary aspects on a global basis, and that, I think, will support the gold and silver. So once the Fed meeting is out of the way, I think we can start to see a move higher in both gold and silver. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.